Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm here with a video about the new covered call ETF JEPE or GEEP. So it's a new monthly paying income ETF. It's emitted by JP Morgan. It follows the MSCI Europe Index Total Return Net and it came out on the 19th of February. It's going to pay out its first distribution on the 8th of May and it went ex-dividend already on the 9th of April. So always with JP Morgan, you have to wait almost a month before you receive the distributions of their income ETFs. So for the covered call ETFs in Europe, the dividend paid out is for more than 95% generated by the option premiums. So that's why I keep talking about income ETFs and also about distributions and not really about dividends. But yeah, it's a bit of an annoying thing that every distribution is called a dividend, but in fact it's a distribution of option premiums in most of the cases for those kind of covered call ETFs. And this will be the case as well for the GEPE or the JEEP from JP Morgan, but for now we don't know that, of course, but normally it should be like that as well. And if you want to invest in this ETF, always read the documents. I have the link here, and when you click on that, I will put it in the comments down below. You will go to this website from JP Morgan, where you have all the information, all the text about covering their asses that when you invest, you can lose your money. So actually here, risk indicator only a 4. I believe it should be a 5 or a 6. You know me, I'm more of a risk-averse person, so I would always classify the risk higher when you invest into ETFs or stocks. But yeah, all the information is here. You can also see the list of exchanges with different ticker symbols: GP, JEEP, GP, JEEP, and GP. So the 6 Swiss exchange. It's here in euro. On the London Stock Exchange, you can also buy it in Great British pounds. So that's really nice for the people that live in the UK. And then, of course, all the portfolio managers that are earning a lot of money with your money. But normally, when you invest, you need to pay somebody to do it for you. And then it's best to put it in an ETF that has not so high costs. I don't know where it is here. Here the NAV change is 0.01 in the negative, but the total expense ratio isn't here. But that's why I have it here, of course, with the total expense ratio being 0.35%. And yeah, this data is already a little bit dated. So 30 million euros. When you look at here, it's already more. It's already 46 million. And you can also find it on the SIX stock exchange. So you go to ETFs and then you go to Explorer, you type in GP, you click search, then you have here the result. You open it in a new tab. That's what I always do, because otherwise when you click on it you lose this this page. You immediately go to here. Here you have all the data. You can go to the chart, you can go to fund details. So it started on the 19th. You have the valor number as well for your tax return. Then you can click at on the dividend. So the dividend is 0.2433 euros and it will be paid out on the 8th of May. I still believe that they should add this information in this graph as well. So 6 stock exchange website manager, please add this data as well. It's pretty annoying that you only have the ex-dividend date and not the true payment date of the stocks and the ETFs. But here you can go to dividend history, and here you have all the information: the ex coupon date, the record date, and also the payment date. And Here you can already see that they expect 12.51% of annualized dividend yield, but I believe it's going to come down because it was already a month and a half before, even almost 2 months before they went ex coupon date. So I think this is a bit of an overestimation. I believe that they will be closer to 7.5% annualized dividend yield overall. But for now, that's all just speculation. And yeah, when you look at everything here, you can also go to fact sheet and the key information data, but always go to this tab and go to the legal documents, and there you have all the important documents to see what the ETF is actually doing, how they invest their money, or actually your money, and how they are dealing with the options strategy, which is really important that you understand that. I'm not going to explain that to you. You have to read it for yourself and you have to understand it for yourself. If I explain it to you and then you believe me, you can blame me. And as always, in my presentations, my videos, it's not financial advice. So always be careful when it comes to investing. That's the only advice that I can give you. But cover call ETFs, there is a lot of controversy about these income ETFs. A lot of hate on them actually. You have a lot of YouTubers that abuse the fact that people don't know what covered call ETFs actually are, and they keep saying the same stuff, and it's all correct. So what they say is correct, but a cover call ETF is a cover call ETF. It does what it does. So here is a bit of love for covered call ETFs. They are meant for income generation. So you don't want them actually for their growth potential. They can still grow, but the upside is capped just because they use option strategies. And because they do that, normally their upside is capped. Especially when the market goes up like crazy, you will have a capped upside with these kind of ETFs. But you receive premiums, which make up a lot of the losses that you will have when you just invest in a cover call ETF and you only look at the price evolution. So the 7.5% that I suspect that this GPE will have is going to cover a lot of that capped upside. They will trail the underlying equity index over the long run. So there, those YouTubers are correct. But they do provide a bit of downside protection as well. So when the market goes down 15%, your cover call ETF will go down 12% normally. So you have a bit of downside protection. Tax inefficient? Well, a lot of YouTubers always say that it's tax inefficient, but here in Switzerland, the dividends are taxed just the same as all the other dividends in Switzerland. So mostly when those YouTubers refers to this, they refer to it in the sense of a US citizen. They are also US YouTubers, so I'm not blaming them. But there are also a few European YouTubers that are saying that they are tax inefficient. Well, here in Switzerland, it's definitely not the case. If it is the case in your country, you should check that out. But if it is tax inefficient in their country, they should specify that it is in their country and not specifically in your country, perhaps. So I really hate the fact that they are being very black and white, but actually it's really much of a gray area when you talk about tax. Then they mentioned that the fees that you need to pay for cover call ETFs are really expensive. But actually, when you look at it, certainly here in the European continent, it's with 0.35%, it's actually more or less on the average of dividend-paying ETFs. There are a lot of dividend-paying ETFs where you pay a higher fee with 0.40, 0.46%, and 0.46% comes to mind because it's the total expense ratio that you need to pay for the SGPEX, the iShares ETF that my wife and I started investing in 2016. So back then the total expense ratios were higher, but BlackRock still hasn't lowered the high fee of 0.46%. A lot of people, they don't care, but my wife and I, we already stopped investing for over a year now towards SDGPX just because it's a bit too expensive and it's also too high of a percentage in our portfolio. So we are working towards our correct ETF distribution, but more on that later. And then you have the risk of NAV erosion. And you have some YouTubers that warn about NAV erosion, and it's completely correct. You always should be aware of the fact that when an ETF has negative NAV erosion, that it is a bad ETF. But for cover call ETFs, UCITS ETF in particular here in the European continent, so far I haven't seen that. The NAV goes down when the market goes down, but all the other ETFs go down as well. Then of course, because they are cover call ETFs, their upside is capped. So when the market recovers, the cover call ETFs recover not as much. So it seems that the NAV is going down and that there is erosion, but actually it's what cover call ETFs do. And we don't have the yield max ETFs like in the US, where you have monthly payments that are insane, you have weekly payments that are insane, where you do have NAV erosion. But for the few cover call ETFs that you can actually buy here in the European continent, I haven't seen it so far. So let's go to the GP or JEEP ETF. So JP Morgan Europe Equity Premium Income Active Usage ETF. And it has the ISIN code EE00064TWYK9. The total expense ratio is 0.35%. Currently, you can buy one share on the SIX stock exchange for 24.80 euros. On the website of JP Morgan, you could actually see that the NAV is 24.7840. So you pay a little bit of a premium compared to the actual NAV of the ETF. And the currency of the dividend is also euro. There are 158 holdings in this ETF, so this information comes from the website of JP Morgan, not from just ETF. There is 46 million euros invested into this ETF. The replication type, I put in full replication, but actually that's not completely correct. But this information is also given for the JEPG and the GPI. So that's why I put fully replication, but I haven't read it anywhere, in fact. So check it out, and if you find it, let me know in the comments down below. So the 1 year, 3 year, and 5 year performance I can't give just yet. And the total performance since its inception on the 19th of February of 2026, it's either plus 0.02%. So that is what you can find on this one. So when you go to the overview, oh no, it's not here, it's short. Oh, it's here, 0.02%. It's here. But on this website and on this website, when you go to the historical price, you see that it's actually down 0.90%. So that's why I put plus 0.02% and down minus 0.90%. And I believe minus 0.90% is more correct. So lately, Just ETF is always lagging behind. It used to be a better website. I still like it a lot, but it seems like they are moving the information more slowly than they used to be. And they pay out 12 dividends per year, so in all months the dividend yield currently on the website it's 12.5% more or less, but I suspect that it's going to be closer to 7.5% of dividend yield. And the first dividend is going to being paid out in a few days on the 8th of May, and it's going to be 0.2433 euros. So will we buy it? You know, we already have 7 ETFs in our portfolio, and we still don't have the right distribution of all of them. So SDGPX, because we started with that ETF, is still too high. We are working on buying all the others so that we are getting closer to our correct distribution that we set up. And that distribution is made so that we have more or less even dividend payouts every month. And the thing is, we do have too many euros coming in because we have so much SGPX. So maybe we will start buying GEPE, although when we do that, it will bring in even more euros. And okay, that's a good thing to have when you want higher income, but we are still reasonably young. We still have 20 years to go before we retire, of course. So we have a cover call ETF on the S&P 500. That's a bit more expensive. But when we then decide to buy the GEPE, we will lower the percentage of the XYLF ETF that we have. JEPG was another possibility where I was thinking about of buying that one, but my wife is not that keen on that idea. So then we would have even more world ETFs in our portfolio. And thing is, with the JEPG there, the US is very high represented with about 65%. So we don't really want that. And if we think then about the GEPE and the fact that we like Europe and European companies, this one has more possibility to come in our ETF portfolio. And if we do, I will let you know. And will you add it in your portfolio? Let me know in the comments down below. And with that being said, I thank you for your attention. Please hit that subscribe button, hit that like button as well. That helps out my YouTube channel enormously. And see you on the next one on my YouTube channel. Bye.